Welcome to Tillray Times. This channel is dedicated to cutting through the noise surrounding Tillray Brands and the broader cannabis and consumer packaged goods sector. We don't focus on hype, short-term price swings, or emotional market reactions. Instead, we analyze what actually drives long-term value: regulatory shifts, institutional positioning, balance sheet strength, global expansion, and strategic execution. Every video here is designed for investors who want context, not clickbait, and understanding, not speculation. Whether the market is moving up or pulling back, Tillray Times exists to explain the story behind the price and the forces shaping Tillray's future. When cannabis rescheduling gained momentum, the market reacted aggressively, as expected. Tillray surged more than 25% in a single session, which naturally attracts retail investors chasing quick gains. But rallies driven by headlines often fade once the market begins to price in the hard realities of regulation and taxation. Rescheduling is not the same as full federal legalization, and this distinction matters more than most people realize. Schedule III status still comes with medical oversight, regulatory complexity, and a long transition period, which means there is no instant fix for the company's historical cash flow challenges. Relief from Section 280E, which has long prevented cannabis businesses from deducting normal business expenses, is meaningful, but will take time to implement. Meanwhile, the market is already beginning to price in these complexities. The result is volatility, pullbacks, and heavy trading volume, all of which signal that institutional money is distributing shares quietly behind the scenes, even as headlines continue to hype the story. On one trading day alone, over 22 million shares of Tillray changed hands. This is far above average volume and is indicative of institutional repositioning rather than simple retail enthusiasm. Big investors don't chase news. They sell into strength and manage risk. This is an important lesson for retail traders. Volatility can be exciting, but it is often orchestrated by those with deeper pockets. Understanding this dynamic is critical for anyone self-managing their investments, whether through platforms like Robinhood, Fidelity, or SoFi. The sudden surges and dips that grab headlines are not random. They are the result of institutional players carefully locking in profits and navigating uncertainty, which is why it's so easy for retail traders to be caught off guard if they focus only on short-term price movements. Another critical point that many investors overlook is that Tillray today is no longer simply a cannabis play. The company has evolved into a diversified consumer packaged goods business with exposure to alcohol, wellness, hemp, and pharmaceuticals. It has become the fifth largest craft brewer in the United States, and this craft beer portfolio provides recurring revenue, established distribution, and stability that most cannabis companies simply do not have. This transformation changes the risk profile entirely. A significant portion of the current valuation comes from their alcohol and wellness divisions, yet retail investors often fixate solely on the cannabis angle. This is where many people misunderstand the story. The stability provided by the beverage business acts as a foundation, allowing Tillray to navigate regulatory uncertainty while maintaining long-term growth potential. The launch of Tillray Medical USA represents another strategic pivot. Rather than placing all bets on recreational legalization, the company is positioning itself to operate within a federally recognized medical framework. Medical cannabis markets are slower to develop but are more defensible, relying on prescriptions, pharmacies, and institutional trust. Tillray has experience in this arena from Europe and Canada, providing a blueprint for scaling within the United States. This approach may not deliver immediate excitement, but it creates long-term legitimacy and positions the company to generate sustainable margins. The market often underestimates the importance of this shift, focusing instead on recreational hype. But the medical strategy represents a calculated, forward-looking play for stability and profitability that could outlast regulatory uncertainty. Before we end, a quick disclaimer. All content on Tillray Times is for educational and informational purposes only and should not be interpreted as financial advice or investment recommendations. Investing in stocks and markets involves risk, including the potential loss of capital. Always conduct your own research and consider your financial situation and risk tolerance before making any investment decisions. In addition to their medical pivot, Tillray has capitalized aggressively on the 2018 Farm Bill, launching hemp-derived beverages in over 1,000 retail locations across 10 states. This strategy leverages existing craft beer distribution networks, allowing THC-infused drinks to appear alongside traditional beverages in mainstream retail channels. Smaller cannabis companies simply cannot replicate this kind of footprint due to limited logistics and capital. Tillray is no longer just a grower. It's a consumer products company building shelf presence, brand recognition, and supply chain dominance. This infrastructure gives them a significant competitive advantage, turning regulatory loopholes into real-world opportunities that generate revenue today, rather than waiting for federal policy to catch up. Financially, Tillray still faces challenges, and it is important not to ignore them. Interest rates, while stabilizing, remain a burden, and the company recently recorded a non-cash impairment due to market volatility. Cost-cutting measures and synergies from mergers, like the one with Afria, have improved EBITDA performance, but net profitability remains a work in progress. Investors accustomed to predictable earnings may find the volatility uncomfortable, yet this is exactly what the market is pricing. Understanding the underlying balance sheet, debt profile, and operational realities is essential to making informed investment decisions. Retail investors relying solely on price charts or headline-driven speculation are at risk of misinterpreting the situation. Analyst sentiment around Tillray remains highly divergent. Some see significant upside, driven by potential cannabis growth and continued expansion in the alcohol and wellness sectors. Others remain cautious, emphasizing the slow legislative process and persistent macroeconomic pressures. This divide stems from the question of how much value to assign to stable, recurring revenue streams versus speculative cannabis upside. If consumer demand for craft beer slows, a large portion of Tillray's revenue is exposed. Conversely, if federal policy accelerates, Tillray is uniquely positioned to capitalize on that shift, making it a potential industry leader. This tension between stability and optionality is a central reason for the stock's continued volatility, with daily fluctuations reflecting the market's struggle to reconcile these competing narratives. Institutional ownership is evolving, with funds focusing on consumer staples taking positions, signaling a shift in perception. At the same time, short interest remains elevated, creating a high-stakes tug-of-war between bulls and bears. Every rally encounters selling pressure, but every positive catalyst carries the potential for a short squeeze. Observing these dynamics in volume and price action reveals the delicate balance between opportunity and risk, which retail investors must understand if they hope to navigate the stock successfully. Long-term catalysts, such as potential expansion of Medicare and Medicaid coverage to include hemp-derived wellness products, could dramatically increase the addressable market, and Tillray is already positioned to benefit from these changes through existing infrastructure. This proactive strategy demonstrates that the company is working within current laws while simultaneously preparing for future opportunities, which is far more sophisticated than relying on speculative legislation alone. The broader lesson here is about managing expectations. The market is conditioned to expect instant results, but Tillray is focused on building resilience, legitimacy, and diversified revenue streams. Every time there's a hint of a legislative win, the stock spikes, only to retrace once reality sets in. Investors must be able to separate hype from substance, looking closely at quarterly reports, revenue growth across segments, and strategic pivots like the medical and hemp beverage initiatives. Craft beer now accounts for roughly 30% of revenue, providing a stability buffer that most other cannabis companies lack. Understanding this allows investors to see beyond the volatility and evaluate Tillray as a long-term, evolving business rather than a short-term speculative gamble. In summary, the Tillray story is not about overnight transformation or sudden windfalls. It is about building a stable, diversified company capable of navigating a complex regulatory and economic landscape. Volatility will remain, and headline-driven spikes will continue to create excitement. But true investors should focus on fundamentals, strategic positioning, and the gradual realization of potential across multiple business lines. Tillray is no longer a simple cannabis stock. It's a multifaceted consumer brand with infrastructure, distribution, and a long-term strategy that could reward patient investors willing to understand the bigger picture. For anyone self-directing their investments, the key takeaway is clear. Understand the business beyond the ticker, evaluate the real revenue mix, and appreciate that long-term growth is rarely instantaneous. Tillray has positioned itself to be resilient, diversified, and ready for the opportunities that will come as the U.S. regulatory landscape evolves. If you approach this with patience, discipline, and a long-term perspective, you'll be looking at one of the most strategically positioned companies in this space today. That's going to wrap up today's breakdown here on Tillray Times. Market volatility can be unsettling, but it's often during these uncertain periods that the clearest long-term opportunities begin to form. Price action tells you how people feel in the moment, but fundamentals reveal what a business is actually becoming. If this kind of calm, long-form analysis adds value to your investing process, consider supporting the channel by liking the video and subscribing. It allows Tillray Times to continue delivering deeper, more thoughtful coverage.